So without further ado, Andy Leach.
Thanks, Manoj. Good evening, ladies and gentlemen. I last spoke at an event in June of last year, when I was, I think, 3 months into my role, and we've made a fair amount of progress in terms of getting the fund into the market, but we weren't quite there. Well, I guess the really great news is that we've now moved on, and the fund is now open for business and has been for about a month. So, from my perspective, the really great thing about that is having spent 9 months wrestling the fund over the line and, I guess, dealing with the same issues, the same problems. I've now got new issues and new problems, which is, believe me, is very refreshing. Right, so a bit of a history lesson. Most of you probably know this. It's a 185 million fund. We've got to invest it by 2015, to use it or lose it. If we don't invest it by then, it goes back to where it came from. We've got objectives beyond 2015. We want to create a legacy for the region and to create some perpetual motion in terms of having funds available for the next generation of entrepreneurs, etc. It's all part of the Jeremy programme, which has come out of the European Commission, European Investment Bank. It is, whilst it's the fourth one in the UK, it is the largest in the UK. It is one of the largest in Europe. I believe there's one that's slightly larger in Andalusia, but if the euro weakens against sterling, will be the biggest again. And whilst we talk about the £185 million fund, actually, with the co-investment, we expect the fund to attract. This could actually become a £400 million funding initiative into the region. So if you think about that, 5 years, £400 million, that's £80 million a year. So it is a significant fund, and it's a significant initiative that we hope will make a difference. So this is about supporting SMEs, and it's from very, very young businesses to more mature businesses, to help them grow in whatever way they want to grow. The funding has to go into the Northwest. It's to provide economic prosperity and value add to the region. The fund can provide debt or equity. Having said that, the debt fund is 35 million of the 185 million pounds. The remainder, the 150 million, is equity-based funds, so there is an equity cost associated with that. And I guess that's where we see most of the opportunities coming in these growing businesses. As I said, we want to create a legacy. And I think from my perspective, rather selfish perspective, maybe I want the Northwest Fund to become a brand within the world of venture capital investing, to be recognised as a quality player and to be a beacon for public sector investment into SMEs, to help businesses grow and survive, and their objectives: safeguard and create 14,000 jobs, generate 700 million of GVA, and to go into 700 businesses, which again means if you took 185 million pounds, 700 businesses, that's £300,000 average investment. If you double that up for the co-investment, that's 600,000. So that's kind of the average size that we're hoping, and that may of course come in many rounds of funding. So what is an SME? Less than 250 employees, less than 50 million euros of sales, and less than 43 million of assets, euros of assets at the point of investment. It's got to be in the Northwest. Supporting growth plans, so this is not about transactional deals, it's not about helping people buy businesses. This is public money, we can't do that with public money. The loan portfolio is restricted to 250,000. That's the maximum they can make within that. So really a small loan sitting underneath where the bank is. I mean, this is all gap funding. This is supposed to provide funding where the private sector won't invest. So we're not competing with the private sector, we're supplementing them, I guess. In the current market, that gap is probably bigger than it has been for some time, so that hopefully will create opportunities for us as a fund. The equity investments can be between 50,000 and 2 million. Although we can't put more than €1.5 million in one financial year. Again, these are rules to comply with. So that's about £1.25 million in one go is the maximum we can put in, but clearly in we can go up to £2 million in a number of rounds of funding. We've got a geographic target of 40% into Merseyside. The rest can go anywhere in the northwest. And I think there's two important things there which make this fund very attractive. One is that the range of investment, 50 to 2 million, is much broader than lots of other public sector funds have been, and therefore should create more opportunities for us. And the geographic constraints are much less. There's no postcode lottery. There's no about coalfields areas and things like that driving investment. So it's much more flexible. We're looking for investments with a maximum 7-year investment horizon, and there are inevitably with European money some excluded sectors, such as retail is one that people always quote. North Edge Business Finance, that's the company that I run, that's the holding fund, it's the headmaster's company. Now my role, or our role, is effectively to manage the managers, to make sure we account for everything and report everything properly. We market the fund, we create a brand and awareness of the fund, and we coordinate the marketing and the business development activities of the fund. And we make sure that our fund managers are reporting to us as they should be doing, and everything can stand up to audit. That's fun. Oh, and we have the cash with the treasury function as well. We're limited by guarantee, and what that means is that all our profits ultimately will get fed back into investment in the region at some point in the future. The other really good thing about this fund is that it's matched at our level. Previous public sector funds had been matched on a deal-by-deal basis. So if you wanted £100,000 for a start-up, the public sector fund could have given you £50,000. You go somewhere else to find a £50,000 to match it. Now, it's difficult enough to get £50,000 for a start-up from one party. To have to do two at the same time on the same terms was very challenging. This fund has been matched at our level, so we could put £100,000 into a start-up without having to go anywhere else. So that is a big improvement. That should allow us to deploy the capital a lot quicker than previous funds. As I said, we are expecting over the fund it to be matched, but it may well be that a lot of investments aren't matched at all, whether some others are matched 5 to 1, but overall that should balance. Big shift. I have a board of 5, I have an advisory panel, we have an advisory panel of 9, which includes a lot of people who are experiencing either the sectors we're looking at, or in investment, or fund of funds management. Some very good people who are available to help me and our fund managers. As I mentioned before, we've got investment phase to 2015, realisation 2022. And we're expecting there to be additional funding available beyond 2015 from some prior legacy funds that the NWDA and the ERDF have backed, which should ensure that we have funds available for follow-on investments beyond 2015. We have 6 sub-funds. We'll talk about those a bit later. The sector funds are really looking at the growth sectors of this region. The way that fund managers are established is collaborative, it's non-competitive. We've mapped out the market, they've got their bits of the market, they work together. And I have to say, so far, they've been fantastic, working really well together. We've allocated 170 of the 185, there's 15 more to be allocated once we see where the real demand is in the marketplace. We've procured our fund managers through a robust and somewhat bizarre ODU process, but it's been done now and that's in place, which is good. And I think by bringing this structure, we've got the North West Fund, which is a £185 million, big fund, hopefully can make a noise in the marketplace, can do all the marketing, can use its purchasing power, etc. Yet we've got 6 fund managers who have the expertise in their sectors to deploy and hopefully make the right investments. There's some very experienced investors amongst them. They're going to operate out of 13 offices across the region, and ultimately people have about 48 to 50 people invest in the fund. So we're going to have a very broad front in terms of deploying the capital, which is again, the capital we have to invest.
1 minute.
I knew you were going to say that. They're the fund managers. They'll tell you about that in a moment. I've spoken about them. They're some new to the region. Some have been here for a while. Nice blend of expertise, some new expertise coming into the region. I want to talk about the challenges. I'll take more than a minute to do this. The challenges that we have as a fund is high investment rates to meet. We've got 3 different drivers of this fund. One is to create a legacy fund. Legacy, which means commercial investment, big equity upside. Let's make some money. The second is half this money is debt. It's got to be repaid. So I need some cash flow. I need some more mature businesses. I need ones that are going to allow me to repay that debt. And thirdly, I've got to deliver 14,000 jobs 700 investments, etc., etc. All those three are actually not necessarily absolutely compatible. So we're going to have to drive a line through that and make sure we can tick each of those boxes in our the way we construct our portfolio. We've got the I think the approach to gap funding is interesting. You know, we're in a volatile
30 seconds.
Volatile funding environment. I'm going to slow down intentionally. We're in a volatile funding environment. In a static funding environment, you know where the gap is, and therefore you know where we should be pitching it. At the moment, you know, depending on who you speak to, are the banks lending, are they not lending, what's the private equity doing, it's changing. So we have to make sure that we are keeping a weather eye on that and making sure our investment criteria are in the right place. We need co-investment networks, and also, I think, you know, for me, it's about building a brand, building confidence in public sector investing, and you know, for us, becoming best of breed and doing things exactly the right way. It was open for business on the 20th of December. 2 deals were completed on the 22nd. 3 more deals are going to be completed on Friday. So we're up and running. We've got traction. There's the website. There's an official launch taking place in February in Merseyside, and there'll be some more launches around the place as we get ourselves up and about. I think that's it.
Thank you very much, Andy.